Our viewers, you are very welcome to this conversation yet again on finance and investments around Uganda. This time round, we've chosen a topic that many of you have been looking forward to, have been discussing about. And as we dive deeper into this, we really hope that most of you will be enlightened on matters that we're going to discuss today. I'm by the names of Timothy Ahumuza, someone who is interested in finance and investments and usually looking at what's happening around the Ugandan scene to see what's happening. And joining me today is our very own veteran who we are all very used to when it comes to this finance area. That is the one and only Alex Kakande. Let him do a bit of an introduction and then we can get into the topic.
Thank you so much, Timothy. And thank you so much for having me this evening as we delve into yet another topic and creating more content, awareness about finance and investments, and talking about the current affairs of our society. And I cannot wait to go into details of what we have packaged for our viewers and for our listeners tonight. Thank you so much. My name's Alex Kakande. I'm a finance and investment analyst. I'm based in Bermuda with a strong focus on the Uganda's investments and the Uganda's economy. And I'm privileged again tonight to be talking to you for wherever you're listening in. Good evening.
Thank you, Alex, for that amazing introduction. As you're all aware, over the past couple of months, Alex has always been in the hot seat where he's asking the questions. We thought it would be worth it to switch it up a bit and also pick from his knowledge and experience, especially in this area of investments. So the topic we have for today is around NSSF and its most recently published financial statements or annual report that came out with a very significant, I would say, return when you compare to its peers in the region. And some of those things are things we're going to be moving into. Before, I think the first question I'll pose to Alex for us to kick off this discussion is when you look at this NSSF report, what area for you stands out for you as a Ugandan saver out there, as a member? What gives you confidence in what NSSF is doing with the investments?
Thank you so much, Timothy, for that question. I think for our viewers out there and for anyone who might be listening in, there are two things that, for me, are standing out. I know the conversation online, especially on Twitter, on X, focused so much on the Forex exchange losses that were reported in the financial statements. But we have to look back and say, what have they done right? This is a company that generated close to 2.2 trillion UGX in terms of revenue. Now, that is significant. That is a company that is making money, even before I look at what they have lost. Then two, I want to look at how they are growing as a fund. This is a company, and NSSF Uganda, which is beating almost everyone in the region, that is having a cumulative average annual growth of its fund value by over 14% in the last 4-5 years. That to me is outstanding. To have that annual average growth rate is unbeatable. That's why you are seeing they're almost reaching the 20 trillion in fund size they are managing. And three, the other thing which we need to consider as we have this conversation is governance. For fund of this size, governance is very, very important. And we have seen NSSF has been in the news for the past almost 1 year for whatever reason. But as they closed the financial year, as they published the financial statements, they tried to cover that gap that now they have a substantive MD in Mr. Patrick Ayota. That gives you continuity in the next 5 years. They have a substantive board chairman in Dr. Peter Chimbowa, and all those are good things that I'm looking at when I was reading this report that for me stood out beyond anything. And for anything, my first takeaways were around that and seeing how the fund is growing in its value and also growing in their revenue they are performing before I even looked out what they're going to declare to the fund, to the members. Yes.
Thank you, Alex, for those pointers. And you've highlighted the first area that I wanted us to go into. For any individual out there knows that for most of the companies, the first gatekeepers that you have are usually the board or any form of governance that has been set up to run the company. So when you highlight, I think what happened during the previous year where we saw a lot of committees being delegated to check what was happening at NSSF, how do you think changes that have been made around NSSF could give someone confidence that the gatekeepers who are in charge of NSSF are actually doing their job as they're expected to protect that saver who saves 50K a month, that teacher who is deep somewhere who adds that 20K a month, or to protect those savings? What are some of those changes that you've seen appear in this report?
Thank you so much, Timothy, for that. One, for any organization of this nature, and for all those organizations, the brands, the companies that are operating, whether in Uganda or outside, reputational risk that comes with governance cannot be undermined. The fact that you must have it right for just to build confidence in the society, for the savers to have confidence in society, that must be paramount, right? And whereas we had almost several months of where we did not have a full-fledged MD for NSSF, that sometimes undermines confidence and it creates reputational risk to the entity. But for me, that they have finally appointed Mr. Patrick Ayota as the fully substantive MD. Now we have the deputy MD and all his full leadership team. That to me is a strong indication that both the political arm, the supervisors of NSSF, have confidence in the goings of the fund. But at the same time, we knew last year at that same time, and they actually spelled it out in their report, that at the time when Parliament was investigating NSSF and that negative media attention they had, quite a number of people started withdrawing some of their savings, and yet it's stabilized. But you cannot ignore that because we live in a society where news clicks can run very fast, and someone, if they know, for example, as you know, there is midterm access. Yes. I might sit here and I'm not worried about withdrawing that money, and all of a sudden when I see that media attention that sometimes it's not good, that undermines your reputation and the brand of the company, I might easily just go and withdraw my funds. And I believe they experienced that in the year, but potentially it has stabilized. And now you have to look forward that yes, they have published the financials. Yes, they finally have a fully substantive managing director in Mr. Patrick Ayota. What comes next? And that's where we have to look at and say, hey, at least he has 5 years to go. The reputation has stabilized. We are not seeing so bad news. Actually, we are seeing more and more good news coming into for NSSF. We have seen a few pointers here and there, legal battles with the former MD, but not something significant. That the positives that are coming from the fact that now they have the MD, now the board is aligned, now everyone is aligned, all the different stakeholders, that gives them confidence for them to continue executing their mandate, to continue investing, to continue growing this fund to the heights it's supposed to be.
I think that has been quite elaborate and extensive. And I think for anyone out there, if you had any doubts in the fund, what Alex has sort of taken us through should bring back a bit of that confidence. And maybe another question that I know most of us usually think NSSF can put money wherever it wants to put that money. without fully understanding the limitations around where it can invest. And I know we've had people say multiple times, why doesn't it do this? Why doesn't it do that? But from what I've heard and what I know, there are certain limitations on what NSSF can do.
Yes.
And there are certain limitations in terms of asset allocation.
Yes, please.
I wanted you to just take the ordinary Ugandan through what those limitations are and how those sort of constrain the fund from going into some of those areas that a Ugandan out there would think the fund should be going into.
Thank you so much, Timothy. As you see me opening these documents, this is their annual integrated report where they clearly highlight what their mandate is to invest in. Now, we have to understand what is the first primary mandate of NSSF. NSSF, this is National Social Security Fund.
Yes.
It's social security, it's to protect savers' money. That automatically have to give you an indication that must protect what I've given you, then you can add on to it. You do not want to lose their people's mandate. And from the amended act of NSSF, it states that at least up to let's start from the high risk investments. Those are the equities.
Yes.
We know when you have to invest, you can either invest in your estate, in equities, in fixed income, or in other commodities.
Yes.
Now, NSSF mandate is so much around those three. And the numbers are actually good and what they are trying to execute. That in equities, a maximum of 20% must be invested in equities.
Maybe, sorry to cut you short.
Yes, please.
Someone out there who has not heard of what equities are, could you just elaborate a bit what you mean by equities?
Thank you so much. Now, for equities, we're talking about investments in stocks of publicly listed entities.
Yes.
And equities have the ability to generate some of the highest returns, but also their risk is a little bit medium to high because depending on how the performance of the company, depending the global economy performance, and depending on so many other factors, the prices can go down, like we are seeing what is happening in Nairobi, on Nairobi Stock Exchange, of which NSSF invests on Nairobi Stock Exchange, which actually reminds me of the report we read this week, where they said the Nairobi Stock Exchange is the worst performing stock exchange in the world this year. And that exposes NSSF and inherently the saver. So their mandate, the starting mandate is they must invest a maximum of 20% in that. And we have seen NSSF investments in some of the biggest companies in the region, in Uganda and in Kenya. And their biggest investment in terms of equity is to MTN Uganda, where they have around 330 billion in investments. They have Tanzanian Breweries Limited, around 200 billion. They have Trade Development Bank, Safaricom, Equities, East African Breweries, Umeme, and so many other companies as they are listed in the report. But at the end of the day, it goes back that equity investments or investments in stocks should not go above 20%. Because of the risky nature of it. Then the second mandate they have is around fixed income, and those are the treasury bills, treasury bonds, and fixed deposits. Now that one, the maximum it must be is around 80%. And why you would see them going up to a maximum of 80% and a minimum of around, I think, 72% is because fixed incomes protect capital. Fixed incomes protect the saver's money.
Could you, sorry to cut you short there.
Yes, please.
Could you also just explain a bit? I know you will bring it out on where we are, where NSSF is invested in these fixed incomes.
Yes.
And when you say they protect savings, what's the reason behind the protection?
So yes, so thank you so much for that. Now, fixed incomes, we are talking about treasury bonds, talking about treasury bills. Fixed deposits with commercial banks, call deposits with commercial banks, and most of their investments are within the region. Majority of it is with the government of Uganda's fixed treasury bonds and treasury bills. Then they have exposure and investments to Kenya's market, where they have Kenya Central Bank's treasury bills and treasury bonds. Same with Tanzania and same with Rwanda. So, which is the same product, just that between different countries, some of these can perform differently depending on how the economy is performing.
Yes.
And their exposure around there in the fixed income portfolio is around 74%, which is huge and significant. But that tells you most of these regional fixed income treasuries are performing around between 10 to 20 years. They have yields of around 13, 14 and above. It's actually only in Uganda where the fixed income treasury bonds yield is reduced between last year and this year. But in Kenya, because of the different factors, the yields are going up. And for me as a saver, I would want to see NSSF investing in that, and they have invested in that. Yes, it comes with the different risks we shall talk about later, but at least we know the fixed incomes primarily can help them to protect their first mandate, that never lose the savers' money.
Yes.
You can make the money, yes, we are happy, but at first, let's not lose the money. And the fact that they have invested significantly in fixed income, that allows them not to lose the savers' money.
Yes.
And then the third portfolio, which is the real estate, where I know people in Uganda get interested when they hear about fixed real estate investments. Now, that's a paltry 7.5 of NSSF's investments. They have the Lubowa, they have the Mbuya, they have now the Temanga that is coming up. And they also stated actually in their annual report that around 70% of their real estate investments are undeveloped land, which is still good because at the end of the day, if that land appreciates in value, it accumulates. They are putting up an amazing building on Lumumba Avenue, which will be for offices. But even with all that portfolio of real estate, it's just 7.5%. Why? And the question a Ugandan would ask right now would say, why haven't they invested significantly in real estate? Because one, the risks when it comes to real estate, and two, the return. Because real estate investments are long term. Sometimes these can take 10, 15, 20 years to work. So you want to ask yourself, if the bonds are giving me a yield of 13%, 14%, 20-year bonds in Uganda right now are giving a yield of around 15.8%.
Yes.
Yet in real estate, I'm going to get around 12, 11%. So you have to make a decision. And I know they have an amazing in-house finance and investment team that sit down every single day to make this decision. But yes, they have a significant real estate portfolio, but it's just around 7.5%. So those are the three ones, which is the equities, the fixed income treasury bonds and treasury bills, and the real estate.
And I think anyone out there who had any questions around the assets is now very aware of the three asset categories that NSSF invests in. And I know the one question that usually comes around when people speak of the investments NSSF makes is the housing projects that NSSF takes on are not for the Muntu. Usually they are for the high-end people because they are not really affordable for the Muntu. Is there anything in the report that indicated that NSSF would be considering such in the near future, or any limitations that you think you have seen in the report that are highlighted for the Muntu sort of housing?
Thank you so much for that. And I think it's very important for people who are listening in to appreciate first, I must protect, as NSSF, they must protect the savers' money. So, whereas certain social investments are also very good, you want to firstly be optimistic that the savers' money, the investments by the savers money is not going to get lost. Now, yes, and I have been one of the most ardent advocate of NSSF investing in low-cost housing. Because the low housings, the average price is around 400, 500 million, 600 million. Who how many people can afford that? Not even their savers. At the Mboa Citadel project, yes, in their report they say it's fully sold out. But how many years has it taken to be sold out?
Yeah.
And we see in these reports, they are saying even the net gains they get in those projects, which are very expensive, is not so much because they can take long to get sold out, but they manage to sell them off eventually. But at least we have seen their shifting focus, especially on their Temangalo project. They're trying to do over 3,500 housing housing units, and how they're trying to execute it. It's to address the lower person, the middle income person at least. And the way they are trying to do it is to, as much as possible, lower the cost to allow that the final price they will go to price in at these units would be commensurate to at least the average person to be in position to afford them. And that's what we are seeing, because it seems the Temangalo is almost aligning to the Sentema for Buganda Kingdom. So they are trying to make that investment. In the report, they do not state how much it will cost.
Yes.
And for someone listening in today, yes, we have seen some reports where they are saying, hey, it might cost around 90 million per a 2-bedroom house, which would be really cheap, though still very few people might still be able to afford the 90 million. But at least we are going somewhere. And is this, and in the report they state part of their risk is the construction cost and the related cost of constructions are very expensive in Uganda. Maybe that's when sometimes they have the powers, they have the lobbying powers to lobby to government to have some of these factored in and reduced to allow them to provide low cost housing. I'm optimistic at around Temangalo. Phase 1 is around on 79 acres. We shall see by the time they finish off all the phases. But potentially, that is a step in the right direction. I know they are still limited by how much they can invest in your estate.
Yes.
But potentially, they cannot ignore that. We cannot sit back and say savers can rent forever only for them to access their money at the end. There is something that they can do.
That can be
but at least the Temangalo is, at least in my opinion, a right step, a good step in the right direction.
And yeah, thank you for answering that. I think that's a big pain point for most of us. Now that as we start to go a bit into the numbers, when you read this report, there's something consistent that is mentioned, especially in most of the statements. Let's say the chairman's statement, the MD's statement. They all mention that they have this goal of getting to 50 trillion shillings by 2035. When you look at the numbers and let's say even based on your historical analysis, how are we on that goal? Like how is NSSF looking like when it looks at its 2035 projection of 50 trillion?
I think we have to look back where they are coming from and understand what is their biggest source of fund value. And you have to look at that in 20, and I have their report here, their summarized report. I think they did an amazing job on their report this year. They talk about in 2018 to 2019, their total fund value was 11 trillion. 5 years down the road, in 2022-2023, they are around 18.5 billion. Yes, they are under what they had budgeted for, but still they have grown. That's around 14% cumulative average growth rate. And it's true, you have to appreciate that more people are getting formally employed in Uganda. We are seeing more compliance in the country by more employers declaring NSSF and paying it up. NSSF has also stepped up their compliance measures. I saw an advert this week where they're advertising 5 compliance officers. You can imagine they're trying to get as much funds as possible. Is it achievable? Yes. When you look at where they have come from the past 5 years and knowing that they have 12 years to go, it's achievable. They can be a significant player. That's one, especially when it comes from the fact that more and more people are getting employed formally, which would mean more and more people are getting paying NSSF. the more Ugandans we're about to potentially jump into middle income status.
Yes.
That is debatable. That impacts people's employment, which impacts people's salaries,
Yes.
and that allows them for the fund to grow.
Yes.
The third angle you have to look at, they are generating around 2 trillion UGX almost every single year.
Yes.
Losses notwithstanding, their cost to income ratio is going down.
Yes.
Now, when you start generating that and add it on the assets under management,
yes,
what you end up having to see is a fund that is going to grow every single year. That
yes,
even if you say right now they're at 18.5,
yes,
last year they were around 17.25, which means that that 1 year they have added on around 1.3 trillion.
Yes.
So if they are to move to do 1.3 trillion every single year for the next 12 years,
yes,
that puts them around 20 trillion,
yes,
which would around average of 22 plus 18 to around 40. So it's within reach.
Yes.
Especially knowing that in Uganda, the population is growing, the employment, many people are getting employed officially. And there is another angle which means people must appreciate, and it has been happening in the last 4-5 years.
Yes.
Voluntary contributions.
Oh yeah. Oh yeah.
People in the informal sector, other people are doing voluntary contributions to NSSF, especially after seeing the average annual declarations to people's savings. 10%, 9.5%, 11%. This year has been 10%, withstanding all other factors. So people, that has increased, and that can allow them. And if the reputation risks are considered and everything, potentially they will hit it there. At least when you look at the numbers, their performance, their total core revenue they generate, the contributions they are getting every single year, they are more than the payments, the claims they pay out every single year. Still, they are on pace to get to the 50 trillion company by 2035. We shall see when we get there. Slowly, we shall be monitoring them.
That's a good analysis, and I think as you look at the growth and the dream of getting to 50 trillion, it starts to become more realistic. For those of you that are watching out there, you have to also appreciate that NSSF is the biggest fund, I think, across sub-Saharan Africa. When you look at assets under management,
yes,
there is no other fund across the sub-Saharan Africa that is of that same size as NSSF, and that has a dream as ambitious as the one that NSSF has. Yeah. Now, moving into performance, now that you've highlighted it, previously we spoke about the 3 asset classes that NSSF invests in. So I wanted us to speak a bit about how those different asset classes have performed across this year that has just ended, or even historically, how that has trended over the past couple of years. Yeah.
Yes.
For someone watching out there.
Thank you so much on that. I know I talked about their total revenue generated in this year around 2.2 trillion.
Yes.
That is enormous for a company to generate that. And it's driven, like you have told you, 74% of their investments are in fixed income, which is treasury bills, treasury bonds, and fixed deposits. And the rest of the investments are in equities, which is their performance in equities is very good. We saw around March, around 59 billion in dividends paid out by MTN to them. That was very sweet. Thank you so much to whoever invested in MTN. But still, they have been affected by other risks.
Yes.
And their biggest risk has been foreign exchange risk.
Yes.
They have close to 4.4 trillion in Kenyan investments, both on the Kenyan Stock Exchange, in companies that are listed on the Kenyan Stock Exchange, which means they are investing in them in the Kenyan shillings, and they have also exposures on the fixed income, which is the treasury bills and treasury bonds for Kenya. And that has been their biggest pain this year, because regionally, almost all currencies lost value versus the Ugandan currency. In Kenya alone, it was around 22 percent, which that meant that every investment they had made in Kenya, whether it's the treasury bonds, treasury bills, lost around 22% when they had to value it as of 30th June 2023.
Maybe just to pause you right there. For someone listening in, could you please just explain a bit using a simple example of something of $1 million or an investment of 1,000 shillings, how that 22% filters through to the losses that you're talking about from Kenya?
Okay, thank you so much for that. So how investments work, someone has to understand how do investments, especially investments across the borders, do work. When in Kenya, when they are to buy treasury bonds, the Kenya Central Bank lists them in the Kenyan shillings.
Yes.
So for them, they will say, I have 1 million Kenya shillings, right?
Yes.
And as an investor, in this regard, you or NSSF, you're going to go and buy, you're going to get the UGX because you earn in Ugandan shillings.
Yes.
Buy Kenya shillings, the equivalent of 1 million Kenya shillings, and then you go and buy the bond. So when you buy the bond, let's assume 1st July 2022,
yes,
when the rate was for 1 Kenya shillings, the rate was 32 UGX.
Uganda shillings, yes.
So that means someone or NSSF needed 32 million to buy 1 million worth of Kenya shillings.
Yes.
Now, come forward to 30th June 2022.
Yes.
In the Kenyan books,
yes,
you still have 1 million worth of Kenya shillings.
Yes.
But in case for Ugandan shillings, you have to look at the translation.
Yes.
How much is it worth it now? That right now, by 30th June, the Kenya shillings was for 1 KACH was now 25 UGX.
Shillings. Yes.
So that means the 1 million worth of investments you'd have made in 1st July 2022 at the beginning of the financial year, right now, which you spent 32 million, now is worth just 25 million. And that means you have made what we call a foreign exchange loss of around 7 million.
Yes.
And for NSSF savers or listeners or people who pay attention to this, this is not a realized, we call it in accounting term, realized or annualized. It's so much accounting. Most of their investments are long term, 10, 15 years, they make regionally. So this is something they can recover from. For as long as the Kenyan economy recovers, the Kenya shillings appreciates in value, and this is what we are expecting in the medium term. Most of those losses that we are seeing on books can be recovered. Now, the challenge would come in if NSSF is to sell their investments they have in Kenya. Now, you would realize they would have spent more money than what they are going to come. Now, that's where the problem would come in. But the good thing, NSSF plays a long-term game. So then we are not expecting them to sell anytime soon. So these 830 or 850 billion in FX losses we are seeing as part of their performance can be they can be a gain later if the economy improves and the Kenya goes back to 28, 29, 30. What we are seeing as losses this year will be gains next year, and that you cannot easily ignore it in our economy like ours, because our currencies are not those are stronger currencies. They can go up. They call them commodity currencies. Now, someone would ask themselves, why didn't NSSF hedge or protect against such losses in the investment language? And in their report, in their performance report, they list out those reasons why they did not hedge it. One of the reasons they say is it can be expensive to hedge against commodity currencies because when the global economy goes south, the prices, the currencies goes down, and sometimes the losses can be dire. When the global stocks improve, the currencies can appreciate. So sometimes you might, for our currencies, I think they're saying let's see it through, because we are not playing a short-term game, we are playing a long-term game. Instead of the net benefit from hedging might not be worth it versus the cost you have to pay to protect against those effects. So that is where their biggest performances, especially from the loss perspective, is. It's because we have seen most currencies in Uganda, but most currencies in the region versus Uganda have depreciated. That can be good for Ugandan because it means our currency is appreciating.
Yes.
But for funds like NSSF, that's where they are getting their problems.
Yeah. And maybe to and thank you for that good explanation. I think for anyone out there who looked at the loss without fully understanding where it's coming from, that sort of summarizes where the loss comes from. And I'm sure once you take it out or once you minimize it, you actually see that the trend is actually upwards for NSSF. And when we speak of such a performance, I think the next question that I have for you is around when you look at the return that NSSF has given to its savers, most people analyze it and say it's based on the opening balance, the beginning balance, instead of the cumulative savings throughout the year.
The year, yes.
And when someone decides to look at their cumulative savings and add them to the beginning balance, the actual realized return is usually much lower than the actual return that has been attached to the savings.
Yes.
How have you looked at that in comparison to someone who took their money to a unit trust or any of these other places? Yeah.
So now it would be comparing NSSF to unit trusts. Sometimes if it's in terms of investments, yes, you might say this one might give me more money than this one might not give me so much more money. But you have also to understand the mandate. The mandate of NSSF is for social security for all the workers. The mandate of NSSF is to make sure people have a safety net when they retire.
Yes.
They have a fallback plan. The regulations around NSSF are some of the strictest in the region. So yes, I know even I, as a saver with NSSF, the way they compute the annual return they declare is not so much, I'm not so much happy. But at the end of the day, it always compounds out. Because one thing you have to pay attention to is this year they are using the opening balance as of 1st July 2022. So that means the savings, for my savings for 2022 and 2023 have not been considered. But in 2023, they will consider, in 2023, 2024, they will consider them. In 2024, 2025, they will consider it. That it's because of the cumulative way of declaring interest on the fund balance that over time it compounds out. At the end of the day, remember that in Uganda, most of our savers are not young people. They still have like 10, 20 years to save in this fund.
Yes.
So the 1 year lag might be one of the best way to compute it, not to put themselves on pressure. And how do we declare that? Because like you have seen, in this 1 year, they have made almost $1 trillion in FX losses. These are not actual losses. These are FX annualized losses. So if they have to declare interest on those, people will get less money. But allow the 1 year lag for everything to smoothen out. Then you declare next year, you'll have a better view of the performance of the fund and what you declare on. And what people shouldn't worry about when they look at it from this angle is that every single year, whatever you contributed last year will get now its money. Every single year. So that compounding kind of ends up zeroing it down. Now, does that mean we shouldn't compare it with the other funds like the unity trusts we have in Uganda? Of course not. We should. They have almost the same exposures, so we need to hold them accountable.
Yes.
They can do better. But because for them they are regulated by a different mandate, even their investments. We have unit trust funds in Uganda that have 96% exposure in treasury bills and treasury bonds. NSSF can't have that. Recently, we have seen the midterm access to NSSF servers. That alone, the legislation has to impact how they end up having to invest. All of a sudden, if you had your projection that everyone who is going to be 60 years or 55 years and above will be 10 people or 15 people, now you have a midterm access. Now you must always factor that in. So all of a sudden, if I was to invest in long-term bonds alone, now I must invest in call deposits. I must invest in fixed deposits, which I can turn quickly into cash, because now I have a new group of people that can withdraw that money. When you put that on the back of your mind, you realize that the mandate NSSF is operating in, the scrutiny, the review is not the same as the unit trusts to easily compare them. So if they have managed to declare 10%, this is what most other unit trusts, they give you 11, 12%. But if you have to ask most people, where do you think your money is most safe in? They are safe everywhere. They are safe in unit trusts. They are safe in NSSF. But if you have to choose where it's most safest, most people will go with NSSF. So for the safest investment, giving you an average of 10%, I would say it's not bad.
Okay. And I think that the final question that I'm going to ask you is around an area that has come up again and again and again and again. Should the private sector be brought into this pension, the whole thing of the fact that NSSF is the only one that has the mandate to take on people's savings, and it's a monopoly in this sector. Some ideas have come around that if some entrants from the private sector are allowed to come into play, maybe it would give NSSF a boost to work harder or even do better. Do you think that's a good idea? Or?
Depending on how you view it from. If you view it from a perspective of employment opportunities for the finance people and investment people, yes, you'd want, I'm one of those people who want to see a diversity in pension management in Uganda, not only have NSSF as the mandated only saver where I have an option. We need to have, competition has always been good, but too much competition and liberalization sometimes can be dangerous. So now, if they can find a way to say we can liberalize it within certain mandates, within certain scrutinies, yes, I would want to see that. Where someone has a choice to say, I will give 5% to NSSF as an SSF, and I'll give 3% to so and so, and I'll give 2% to so and so. Because that competition, the creativity can even be different. We understand businesses that face competition, they operate differently. You do not sleep. Is NSSF sleeping? I'm not saying it's not sleeping. They are doing an amazing job. They are doing a very good job. But competition can be very good for the economy. It's not fast in Uganda. Yes, most countries in Africa, they have one company that they would have one legislated savers fund. But globally, we have seen where the law is one, every person must belong to a particular pension fund. So they can be like 10, they can be 20, they can be regulated.
Yes.
We have the regulators to make sure people do not lose their money. But at the same time, knowing that liberalization, allowing more companies to come to play, can be very good. One, in terms of creativity, in terms of innovation, in terms of employment, in terms of taxes paid, so many other things that can easily be opened up. Are we ready there yet? With every single change we are seeing in NSSF, the change in legislation, the political risk they have to deal with, parliament scrutiny, where we see the ministers' interventions in NSSF operations. Those are some of the risks where we sit back and say, maybe we really need more funds, more private sector, where we know they are not going to so much be at whims of the political arm.
Okay.
Yes.
Thank you, Alex. And I think maybe as you've sort of laid it out, I know for those that have argued for the private sector, the life insurance entities have had the mandate to do this, but I think they have also failed to penetrate. But with what Alex has said, I think it's worth thinking about and sort of getting an understanding, a further understanding on this. Allow me to thank Alex for the time that he has given us this particular evening or morning or afternoon, depending on where you're watching us from and what time you're watching this video, to go over these NSSF financial statements. If you have any question that you think should have been answered in a different or a different opinion, please go into the comment section and raise that question, and Alex will be able to get back to you with a proper response. And also, go ahead and subscribe and hit that button for the bell so that you get notifications whenever a new video comes up. Otherwise, also highlight that the views that are expressed in this conversation are those of Alex and Timothy, and are not affiliated to any other place. So do not go and quote any of the other places that we might be affiliated to.
Thank you so much, Timothy. Thank you so much, our viewers. As we continue to deepen into the financial and investment sector in Uganda, these are deliberate conversations we need to start having. And I can't wait to be hosted again on this platform. For our viewers, wherever you are, subscribe, share, give us your feedback, give us your like, give us anything, because it's through your feedback, it's through your information that you can reach out to us for us to improve on our investment and finance space in Uganda. Thank you so much.
Thank you, Alex.